Good evening, everybody. I hope everyone is doing well. Get my screen shared. All right, gang, welcome everybody. Let me make sure that everyone is muted. Minus that. All righty. Welcome back, my friends. Hope everybody is doing well. We'll wait just a minute or two before we get started. We'll allow people to trickle in. I expect this attendance to get a little bit higher before we get started. So welcome, everybody. Get mentally prepped. How's everybody's day? Dealing with some FOMO, I imagine? I'm dealing with some FOMO for sure. Yep. That seems to be a standard across the board. Not trading yet. Nice. Nice. Good evening, everybody. All right, my friends. Well, welcome. Welcome. Again, we'll wait just a second before we actually get too deep into it. But welcome to lesson 8. This is our last official formal live lesson. This is the lesson where we are going to wrap everything up, tie everything together very nicely. There are a bunch of people out there who I believe their favorite lesson is lesson 8 because it kind of circles everything that we've talked about throughout the course of the last 7 lessons together, right? And it kind of brings everything into unison, right? And make sure that everybody is on the same page about what we should be looking for on a daily basis, right? So in this lesson, what we are going to cover, we are going to first review our triangle offense. It's been a little bit since we've talked about technicals. So we're going to review our triangle offense. We're going to review buy and sell setups. We're going to review multi-time frame analysis. We're going to review levels, all in a quick manner to kind of get that all fresh into your brain. From there, what we are going to do is dive into the daily routine that we have in order to prepare our mentals to get ready to trade each day, as well as to prepare our charts to get ready to trade each day, right? AKA, how can we create a trading plan for each day? AKA, how can we sort of find the stocks that we are going to trade each day, right? So in this lesson, ultimately, we are going to really wrap a whole lot of things up and tie everything that we have talked about together. And it will kind of culminate in me taking you through Thinkorswim, kind of walking you through what my thought process was this morning on the variety of names that we were watching, why I kind of did not pull the trigger on some of the names that I was paying attention to, and what would have made me more interested in pulling the trigger on them, right? And as well as talk a little bit about the SPX trade, about trade management, about understanding how to hold positions, how to trim them. Again, today was not a great example for me. Believe me, I wish I held my puts much longer than I did. I don't think that it was lack of strategy today because NQ made a level-to-level move. It was very gorgeous. But I think for me, mostly today, it was more, I'm not great at holding puts. I'm still working on that because my brain is trained for calls. So every time I see like a spike lower, I'm like, that's the bottom. We're failing to go lower. Not that I tried long. I just closed my puts. But nonetheless, we're going to talk about trade management, how to help sort of manage your positions, how to walk through and say, okay, now that I'm in this trade, how do I make sure that I kind of keep it mine and kind of manage it that way? So tonight is going to be a thick one, my friends. It should be right around the hour 15, hour 20, hour 30 mark. It is not going to be a crazy long lesson, but we are going to make sure to tie everything together very, very nicely. So now that we have some more people in here as well, we do still have, this might be our last formal lesson, but I have a couple of announcements to make to go along with that. So this is our last formal lesson. However, the way that our program works is it's a 4-week program, right? So next week, we still have some MM-specific trade reviews that we're going to do. We still have some other stuff that we're going to cover. It's just not a formal long lesson like this, right? And so normally, you get there's one extra week of like the full Discord included. So that would be next week. And that what we're going to do for Mastermind 10 is we're going to extend that another week because I'm actually, for the first time in history, I heard of nobody blowing an account during the first week or two. I heard of nobody, basically everybody really listened to me when I said don't trade, right? So the flip side of that is that you all didn't get to necessarily follow my trades. Not that I want you following signals. We've already talked about that, right? But what we're going to do, so next week, which is our last official week of the program, will not be the last week that you all have full access to the Discord, right? It will be another week beyond that as well. So I'm excited about that. I'm excited for you all to have the system fully in your head. I'm excited for you to all have the system fully digested. I'm excited for that. So now that you can start to see all this stuff in real time and really process what exactly is, what exactly I'm watching as well on those individual games. Not necessarily following signals. I'm standing by this. I don't want you all following signals, but I think it'll definitely be helpful for a little while for you all to be able to see what I'm doing more and more, right? And so next week I will be traveling a little bit. The week after that, I will be home the entire week, and I'm excited about that, right? So with that being said, at 5:05 Pacific, 8:05 Eastern, let us officially begin, my friends, and we start this with a little bit of review here. So as you all know by now, right, there are 3 core pillars to our strategy, right? Above all else, I want you to take away, if anything, right, when you're looking for a technical setup, when you're looking for something to play out, when you're looking for a setup to execute on, how we identify our setups is through these 3 core pillars, right? The first is candle analysis. For us, we harped on this in lesson 3. For us, this was talking about a buy and a sell setup, right? And we also went even a little bit beyond that and talked about how candle analysis and buy and sell setups really are key to trend analysis as well, right? Then we dove through the mRNA chart. We broke down exactly how trends are formed. We broke down how we like to long higher lows and short lower highs as opposed to buying or shorting breakouts, right? And within trend analysis, that also led us to our little subsection of it, which is lesson 5, the most complicated of the subjects that we have, and the one that I promise you will take you some time to understand. I had a conversation with multiple people today. There was one that was in the Mastermind questions chat. There was also one that was in DMs. And so I apologize if it feels like I'm calling someone out, but I'm really not. I'm genuinely speaking to everybody here. But there was some people, just some general frustration being sensed about not being able to see the potential short trade earlier on in the morning today. I think later on in the day, everybody can kind of see the intraday downtrend form. That probably won't be unclear for many. But there was some general frustration for a few people on not being able to see that stuff in real time. And for me, there was a little bit of frustration just because I love you all, but I don't like. If the biggest problem that you have is not being able to see one thing that was not necessarily an A+ setup based on what I've taught you in real time yet, I don't want you to be hard on yourself, right? Like like I mentioned, right? In the very beginning of this program, the very, very beginning, during the kickoff webinar, I go through a spiel. And in that spiel, I say, no matter how much previous trading experience you have, right? And again, I'm not speaking to one person here. This is to literally everybody. I say, no matter how much previous trading experience you have, right? You are going at some point, right? I want you to resist the urge to put pressure on yourself to either be making money during this or be executing perfectly during this, because it's going to take you time to get through it. Now, at the beginning of this class, I actually even revealed the fact that during lesson 8, I was going to come back and ask if anyone felt like they were special, right? And if they were, throughout the course of this program, they felt like they were a little bit more aggressive because they felt like they only needed 1 or 2 sections of the program as opposed to the program as a whole. Now, I'm not going to necessarily ask you all to type out yes in the chat if you feel like that applied to you, but I know based on the DM conversations that I've been having with people that there are a variety of you who have felt like, whether you in the moment felt like it or not, but over the course of the last weeks have felt like, okay, Jake, all I needed was 1 or 2 things. I'm ready to go full speed right away as soon as I know these 1 or 2 things. And I promise you, it's not the best approach, right? It is not the best approach. I still learn new things about myself as a trader and see different things with the system we trade every day. I'm still learning about stuff. So I don't expect any of you to be a master of it, especially when it comes to multi-time frame analysis, right? Multi-time frame analysis, there's a very specific reason that I intentionally give you all 9 lessons on multi-time frame analysis. It's because multi-time frame analysis is a subject that can be studied till the end of time, right? Like I am still getting better with multi-time frame analysis day in and day out, right? Because really multi-time frame analysis, in my opinion, is the key behind everything. It's what makes everything operate. So I want everyone to kind of give themselves a little bit of a It has been exactly 7 days since you learned the entirety of our trading system. I think there's like maybe 7% of Mastermind 10 who has finished 100% of the bonus lessons, right? So that's not a high number. Again, it's only been 7 days, so I don't expect that to be a high number. But I don't expect you all to be masters of this craft yet, right? I feel like that would be an unreasonable expectation. So just a little side note there. I'm usually actually supposed to say that during this precursor slide, but I kind of forgot. So I wanted to make sure I mentioned it before we got too deep. If you are worried and you're like, Jake, I wanted to be I thought I would get this stuff. Yeah, I told you in the beginning, nobody's special. It's going to take everybody some time. I felt like I mentioned that again today in the mastermind updates area. Yeah, after learning the system in the beginning, I ate shit for a while too. Because it takes time for you to start to see this stuff in real time, right? It's like when you're studying for a college exam, right? The first time that somebody tells you the definition of some algebraic formula, you might remember it, but in order for you to actually solve the problem on the test, you're going to need to run through it a few times on your own, right? Like me just telling you what it is isn't going to allow you to succeed on that test, aka actually trading, right? You're going to need to go through it. You're going to need to run through practice examples. And guess what? Even when you're good, even once you've figured it all out and you've gotten 100 on the test multiple times, there's going to be a point in time when you get some shit wrong. And that's you continually learning on your path, right? So sorry, a little side tangent there, but it's something that I find really important because I don't want you all to be putting this outlandish, unnecessary pressure on yourself where all of a sudden it's like, I need to be so good at this right now just because I was trading for 6 years before I met Jake. I took the mastermind. That 6 years should count. I hate to say it. I want you all to consider your trading education to have started the day this mastermind course started. Everything else before it's kind of like dust in the wind, so I consider you all to have 1 month of experience. So I want you to be building off that 1 month of experience. Now, obviously that's not going to be true for everybody. There are some of you who joined as already consistently profitable traders, but you get my point, right? So with that, let's continue on here. We have talked about the first pillar of our strategy, which is candle analysis, the second pillar of our strategy, which is trend analysis, and the third pillar of our strategy, which is levels. We dove deep into that in lesson 4. Now, I have had a good gauge over the last 10 masterminds of how classes have been doing with the levels based on the questions that they are asking. Typically speaking, most classes, the levels questions go for like 3 weeks after the lesson. I think it was around mastermind like 6 that started to shorten up once I think I just got better at presenting it, right? This class so far, the levels questions have already started to slow off a little bit. Everybody seems to be pretty clear on the levels, and I'm really happy about that. If you feel like you are not, then I encourage you to speak up a little bit in the questions channel and just ask more questions about your levels. Because as long as you ask them in the right way, we will never have a problem checking over them and making sure that they're all good, right? So with that, the first pillar that we talked about is candle analysis. And again, as some of you kind of sear this into your brain, we primarily use this as our system of entry, right? So it starts for us with buy setups. These are most applicable during with trend plays. During an uptrend, you wait for a pullback to establish a support level in a bar to take out the previous bar's high. So this example here, I always like to use because it's significantly like deeper than most of the other examples that we cover. This one has 1, 2, 3, 4, 5, 6, 7, 8, 9 bars of pullback before it triggers a buy setup, right? So if I remember correctly, this was a 1-minute chart, so it doesn't shock me that it has that level of depth of pullback, right? On a 5-minute chart, this would just be like a rest bar or two, right? But again, for us, that formal definition of a buy setup is once we break above a previous bar's high, right? And that for me is the really that's the biggest takeaway that I want you all to have, right? Is again, a buy setup for us is very clear in definition. During an uptrend, we wait for a pullback and we wait for an established support to a bar to take out the previous bar's high. How does it establish support? By taking out the previous bar's high, right? So to the flip side of that, we have sell setups, right? So sell setups for us are how we find short entries, and that's what we're going to be talking about a little bit at length tonight, is how there are a variety of different looking sell setups that you can find on any individual given day. And on a strong downtrending day like today, sometimes the sell setups are not going to be as clean as we'd like them to be, but they will you will still find them no matter what you do, right? So again, these are most applicable during with trend plays. And me personally, primarily as a day trader, uses these for entries primarily, right? So I will wait for, during a downtrend, I'll wait for a pullback to establish some resistance. in a bar to take out the previous bar's low. So it's the exact same thing as a buy setup. We all should have this down by now. Just flip to the downside. You go short as we break beneath the previous bar's low. Based on the questions in the MM questions channel, I am not expecting a whole lot of confusion on either of the last two slides. Basically, after the first 2 nights of this lesson, the questions on this really dried up, which leads me to believe everybody's kosher on it. Everybody's all good on it, right? Again, what I will say is that throughout the course of your career, you will notice that buy and sell setups do not always look alike or similar, right? And so that's something that I think I'm still learning about to this day, is what it, like being prepped and ready for a buy setup off of a different, after different candles, right? Because there's no specific candlestick pattern that we are like required to look for. It's really just the definition of break above bars high and below bars low, right? So in addition to buy and sell setups, and then in lesson 5, we take a deeper dive into the broader concept of failure to go higher. So for this class, I actually didn't use the couch love seat example. If you've watched any of the other previous Mastermind lesson 5s, I use this analogy. I think it's great, but I decided at this class, going through it, I was like, is it really necessary? And I don't think it's super necessary, right? But that being said, I do cover it extensively in the other Mastermind. The reason I paused on it is because I think sometimes it confuses more people. Like I wouldn't remove it to keep you from something, right? I think it confuses more people than it helps sometimes. But broadly speaking, a failure to go higher as a concept, right, is something that has reason to go higher, it attempts to go higher, yet fails. Right? So this for us is not necessarily a tradable action, right? Right here, we talked about at length how during this particular oval here, the break beneath that previous bar's low starts to trigger a pullback on the chart, but it does not necessarily provide a shortable opportunity, right? So here we can see a broad failure to go higher, conceptually speaking, that starts to trigger a pullback. Here we can start to see a failed buy setup, right? And that failed buy setup actually leads us to a shift in trend, right? So what we can actually then take away and extrapolate from that information, I don't know if I'm using that word correctly, but I think I am. What we can then take away from that piece of information is that if we can look at buy and sell setups and then look at failed buy and sell setups, we can actually identify the points in which something has a continuation of trend or it fails and changes trend, right? AKA, let me get this too. This buy setup up here would simply be a continuation of the uptrend, right? Where you have something in an uptrend, it pulls back, then continues the uptrend. Here on these sell setups, we would have something that is in a downtrend, gets a sell setup, and gets continuation through that downtrend, right? On a failure to go higher or a failed buy setup or failed sell setup, that is when you will start to note that trend actually changes, right? So we talked about in our rules earlier on how charts are always either trending or ranging. There's an uptrend, a downtrend, or a range, right? It's always going to be one of those three. In charts, really, they move from going up to going down. Nothing is going to be going in one direction the entire time. If you ever find that stock, let me know. I would love to trade it, right? So when something has reason attempts to go higher yet fails, that leads us with a failure to go higher, right? On the flip side of that, we have what is known as a failure to go lower. Right? So in this example, we see both the broader concept of a failure to go lower, right? When here we break this general support region and we fail to go lower, thus going higher. But it's really right here where we have that failed sell setup that trend actually starts to change, right? We put in a potential higher low that eventually does confirm as a higher low. And in order for us to reach that end game goal of understanding where that trend shift came from, it all starts with that sell setup that triggers, then fails, right? So a change in trend will always start from a failed buy or sell setup, right? Because something will be going in one direction, having one trend, and then we'll shift trends and start to go in the other direction. Oftentimes, there will be some consolidation in between those periods, right? But you will still see some sort of failed buy setup or sell setup that will lead you to that shift in trend, right? So the next thing that we talked about, although this is kind of out of order because we talked about this in L5, but just bear with me, is multi-time frame analysis. Right? Multi-time frame analysis is the backbone of what we do, right? What the number one, I would say, I don't know if it's number one, but it's got to be up there. One of the top problems that we commonly see that students will come to the moderator team and myself and our team members asking about, right, is they'll give us some sort of trade feedback, like, hey, I took this trade, I lost. What was the problem with it, right? And what they'll do is they'll send us a picture of a 2-minute and a 5-minute chart. And they'll say, hey, I took this buy setup here. The 2-minute had flipped to an uptrend. The 5-minute looked like it was going to flip, and I went in. And then we look at them and we say, okay, well, what was the hourly and 15-minute saying? And they're like, well, it was just a rally and a downtrend, right? Or whatever the case may be, right? So it really is absolutely necessary for you to be paying attention to all of these different timeframes at once, in my opinion. On the one stock, the primary stock that you are trading in that individual moment, you should be paying attention to multiple timeframes on them. Yes, you may not have the room on your screens to be able to watch all 5 at once, but any good laptop will have the room to watch at least 4. There'll be small charts, but you can watch 4 little charts. You should be doing that if you're in a trade. That way you are gauging all of the different timeframes at once. Right? I'm going on a trip next week, and on my travel trip, I literally purchased an iPad a few months back so that now I have a friggin' iPad for a chart. I have my screen that's going to be for my like 4 charts, and then I have a little extended monitor that's going to be for execution, right? Like it's going to be the iPad's for Discord. It's going to be, but I need to be able to watch multiple time frames. I can't just be watching one, right? It does not work that way for me. It does not work that way with our system, right? So multi-time frame analysis. Did I delete that slide actually? There we go. Yeah. Multi-time frame analysis is extremely crucial to what we do, right? So like we talked about before, the road trip analogy is really the best way to think about this. You're living in New York at the moment. You want to come smoke a joint with me in California. You got to stop in Colorado, pick up some weed. You got to stop in Arizona, pick up mullet. You got to stop in Montana and pick up Joel. So along the way, you have a variety of stops, and those stops are going to impact the end game journey, right? So a lot of people start with the top-down type of analysis. And again, that's not inherently wrong, but you have to understand how these smaller time frames impact the larger time frames, right? And we're going to talk about this a little bit more tonight when reviewing the ES move from today, right? So really when it comes down to for us and how we use each time frame, the weekly chart is our first priority, right? We always paying attention to the weekly above all else. Next up, we have the daily chart, which is our bread and butter for individual bar analysis and individual candle analysis plus trend analysis. The hourly is the key to it all for us. Levels come from the hourly chart, plus trend analysis is often very, very, very insightful on the hourly chart. Plus, I would say for those of you who are struggling on a 2 and 5 minute chart on a regular basis, please start flipping to 15-minute or hourly chart buy and sell setups, because you will find a higher success rate as it's just a longer time frame. People ask the question, Jake, why is there a higher success rate on hourly chart buy and sell setups than there is on 2-minute buy and sell setups? Because there's like 10,000 2-minute buy and sell setups a day. Hourlies don't trigger all that often, right? There's just a lot more data in an hourly candle, right? 30 2-minute candles in one individual hourly one. So there's going to be a lot more buy and sell setups that trigger along that route, right? The 15-minute is what we consider like the 5-minute plus. It's best used for intraday buy and sell setups, especially after the first 2 hours of market open. The 5-minute is our main management time frame, and the 2-minute is good for early entry, early analysis, entry, and exit. For me, the 2-minute can't be used unless it's in conjunction with the 5. I need to be watching both of those at the same time. If I'm just watching the 2-minute, I usually don't have a clear enough picture of what's going on in that chart, right? Next, we defined our levels in the level system that we use. First, everybody, say it with me. The candle. Wow, I messed it up. Wow. Damn, RIP, pour one out. For the first time I've ever fumbled that. We mark our levels where? The open of the candle that changes trend. The open of the candle that changes trend. Right? So we look for trend changing moments on the hourly chart. We use the open of candles, not the wicks. We pay attention to confirmation closes above or below a level for confirmation in one direction or the other. When we're looking to remove a level, we look for that confirmation as our sign to remove a level. And the last note that we have is that when you have 2 levels that you're deciding between, or ultimately deciding, deciphering which one's more important, I always favor ones that are formed intraday rather than ones that are formed at the end of the day or even at the beginning of the day. The intraday levels for me are the ones that are the most powerful, right? Because that's where you saw a shift in trend on a smaller time frame that caused a larger time frame shift in trend at that level, right? So let's tie that all together. We briefly did this in our last lesson, but I want to kind of bring it all home one more time for you all, is that through everything that we have just talked about, the way that I have deciphered this, and this is my own creation of these 4 rules that I like to look for prior to entering a trade. The first is that I like a level or the opening print as a reference point. Now, there are going to be times where I use yesterday's high, yesterday's low, the overnight high or pre-market high as pre-market low, and use that as my reference point or guide for that trade. However, an A+ trade setup will always have an actual hourly level or the opening print as a reference point. And most of the time, I really need an hourly level in order for it to be like A++. Part of the reason why today was not A++, in my opinion, one of the many reasons, right? Second, we like to trade with the trend. So we like to long lower highs, and we like to long higher lows, and we like to short lower highs, right? So in the time frame that we are entering that trade off of, right, which will vary. If you're swing trading, you're likely going to be using a daily chart, maybe an hourly chart or weekly chart for your entry. If you are using a day trading or scalping, you're probably going to be using a 2, 5, 15-minute chart. So whatever time frame you're entering off of, you want to be assured that you are trading with the trend. So when trading trend pullbacks, aka when it's in an uptrend and we're waiting for a buy setup, we wait for that buy setup to trigger for enter us into the trade, right? On the flip side, when we're trading a downsided move, we wait for a sell setup to trigger in order to enter the trade, right? When we're trading trend flips, aka the rare instances that we are trading not with the trend, we're trading counter trend, you would be generally speaking looking for a failure pattern that can trigger you into the trade. That way you can still have some sort of candle that you can use as a reference point for your stop. That leads us into our 4th rule, though. There's a reason I spent 10 minutes today harping on multi-time frame analysis, is because above all else, we want time frame confluence. And here's the thing where I think people can kind of struggle with time frame confluence. Yes, in a dream world setup, A++, best ever in the world, the weekly, daily, 2-minute, 5-minute, 15-minute, hourly, they would all be one and the same, right? They would all be in one trend and it would be up or something, right? That would be great. But based on what we've talked about, it's pretty hard for that to happen, right? Like it's unless somebody's at all-time highs, that's not usual, just because trends are different on different time frames, right? So time frame confluence does not mean that you are only long when every time frame is in an uptrend, and you are only short when every time frame is in a downtrend. What it means is that your time frames are showing some sort of signs of agreeing with each other. We had a great example of this in our Mastermind 10, our class, lesson 5 for MTFA, where we talked about how the daily chart was still in an uptrend, but it was triggering a pullback, right? And that's really the key that led to that potential short trade that came last week, right? So next up on our list, right, let's kind of continue tying this all together, because one of the things that I'm most often asked at the end of this program is, Jake, do we have like a playbook for any of the plays that you take, or do we have like specific names for strategies that we use and all of that? People always want to know, what are my strategies, right? And I look at them and I respond just dead straight in the eye. I look at them and say, I don't have any strategies. I have the system. We trade the system. It's our system. It's the triangle offense. That's the system that we trade. There is no individual one strategy. Sure, there might be one thing about a chart that stands out to you more than the rest, but we can't enter a trade unless we have checked all 4 of those boxes, right? So in order to check all 4 of those boxes, it's going to require pretty much all 5 of these things in our thought processes, right? First is being that thought process of the level to level, right? Looking for hourly trend moves from one level to the next level. Today in the NQ was a nice example of that, right? Second is using some sort of strength or weakness. We love relative strength and relative weakness. We're going to talk about that more a little bit tonight, but that is an awesome opportunity for us usually to identify tradable names relative to the overall market, right? Next up, we have using patterns and failures. Oftentimes traders will say, I trade like a bull flag strategy, right? Or I trade patterns. We use patterns and failures as one piece of the larger puzzle for us figuring out what is going to happen based off our system, right? And finally, something like an open price reaction. If I asked you what was the thesis of your trade and the first thing you responded with was an failure of the opening print, I would be like, okay, now tell me more, but that's a great start, right? Like, that's a good point. That's something that is. So these all 5 could be considered individual strategies, right? They could be considered like, hey, on this trade, my primary thing I was focusing on was the relative strength, right? That's great and all, but you're still going to need the other parts of our rules in order for you to actually enter a trade off that, right? So the next thing that people ask me is that, Jake, what are your favorite setups, right? What are your favorite setups? What are the ones that you look for every single day, right? It's very straightforward and simple. I like when something is gapping over a level or gapping under a level. Now, there are different types of gaps, which we're going to talk about later tonight once we get into the charts, right? There are different types of gaps, right? However, literally, if you're asking, Jake, how did you find something this morning? Jake, what were you paying attention to? Usually the way it stems from is something that's gapping up or down in reference to a level. Why? Because then we are able to use that level as a reference point, engage the trend from there, right? So for me, the biggest thing that I look for is a gap over a level or a gap under a level, right? All right, let's continue on here, right? So the next thing that people popularly ask me is about swing trading. They're like, Jake, what about swing trading? I want to learn swing trading strategies. Can you tell me swing trading strategies? I absolutely can tell you swing trading strategies. It's everything you've learned. It's the system. Why? Because one of our rules, my friends, is what? Candle analysis is applicable on all time frames. Literally everything we've talked about is applicable for swing trading. You would just look on a little bit of a further time horizon, right? For swing trading, I would want you to follow all 4 of these rules. I would like you to be having some sort of level as a reference point. I would like you to be trading with the trend. I would like you to be trading a trend pullback, ideally, right? Like taking a weekly chart buy setup, for example. And above all else, I want your time frames to be aligned, which if you're trading off the weekly chart, spoiler alert, then probably going to be aligned if you're taking a weekly buy setup, right? Which is not necessarily what you have to use to trigger you into the trade. However, it's literally one of the most popular questions I get asked is, Jake, what about swing trades? Swing trades is it's everything you know. There is no extra sauce, so to speak, that I'm holding back on swing trades. My favorite swing trades are like weekly chart buy setups, weekly chart sell setups, or daily chart 1, 2, 3 patterns. I love those, right? So I will sometimes drill into a smaller time frame a lot of the times, like in order to find myself an entry. Like let's say I was swinging for a potential 1, 2, 3 pattern to trigger and play out, which means I would be entering a little bit early. I would then drill down into a smaller time frame to find that entry. But again, it's the same system that you all know, right? It's the exact same system. There is no other like swing trading elements that aren't involved in the day trading elements, right? The only question that we'll have comes from our last lesson, right? So again, it is a requirement that we go through all 7 of these lessons and kind of ultimately bring back when they would be important or not, right? So when it comes to swing trading, the most popular, not the most popular, but a good question that comes up is, when do we use a spread versus when do I just swing calls or puts, right? So the reality is that using a spread is always a good option, right? And you should use calls and puts only when you do not want to cap the upside. So if you think something could like run into all-time highs and just keep running and running and running, like say on Nvidia earnings a couple months back, right? Like that would be a situation where you probably would want to try and not cap the upside. You would just want to let it work, right? The reality, though, is that spreads are always, always, always a good option, right? They are truly always a good option. Sometimes you just manage the trade a little bit differently. Like we talked about last night, spreads are a little bit less susceptible to theta decay. And so because of that, usually I'm a little bit more prone to holding them as much as I can, right? Pause. My mom texted me. Cool. She just said yes. So let's tie this all together a little bit, right? In order to tie this together, we need to start breaking down our daily routine, right? For me, a daily routine will consist of 2 things, a psychological aspect to the routine and a technical aspect to the routine, right? So what we're going to do, actually, let me see on the clock. Okay, we're at a great time. We're going to pause and take our water pee break real quickly. Very short water pee break, not a long one. Then we're going to come back. We're going to run through these routines. Then we're going to dive into the charts. And I'm going to walk you through my thought process for this morning. So water pee break. Back in 2 minutes. BRBs. All right, my friends, welcome back, everybody. So what we have done over the course of the last 36 minutes is a whole lot of review. That is very intentional. I am intentionally trying to drill this into your brains. That way, when we circle back onto what exactly I was looking at this morning, and then in my ES SPX trade, you'll be able to see exactly what I was looking at, right? That being said, like I mentioned, one of the biggest things that is important to a trader's success is having a daily routine, right? Both, excuse me, a psychological aspect. Pause. Resume. A psychological aspect to your morning routine as well as a technical morning routine, right? So first, let's talk about the psychological aspect of the morning routine, right? It's extremely crucial in order for you to succeed as a trader that each morning you get yourself in the right headspace in order to trade, right? You need to put yourself in the right situation mentally so that you can execute well on your positions, right? So I have been slacking a little bit on my morning routine over the course of the last few months. Some different things have come up for me, but throughout 2021 and all of 2022, this was the exact morning routine that I used that I think really helped push me to a new level as a trader. I would wake up between 4 and 4:30 in the morning. That would be my first alarm of the day. I would do a quick workout. I would really just ride on my exercise bike and try and just do some cardio. There's a statistic that shows that if you do physical activity in the morning, just like walking, like your brain is so much more active after a 20-minute walk than it is after sitting still, right? So you really want to be walking and active and moving around a little bit in the morning. That way you can be fresh and alert, right? From there, I'd do a cold plunge. Not really. I would turn my shower on cold for 20 seconds and then turn it back warm, right? Just to wake myself up a little bit more. From there, I would do what I very bluntly call TTA, technical toilet analysis, right? That, beautiful morning poop situation. I would then do a little bit of analysis while doing that. From there, one of the things that I actually did for the longest time was I would wear what would be called funky pants, right? If any of you were following me since early 2020 or late 2021, you'll be familiar with this. But for the longest time, I would actually wake up and every day, rather than just being in sweatpants, since it was so early in California, in order to prove to myself that I was actually fully awake, alert, and like ready to trade, I would then put on some sort of nicer pants, right? Some sort of like funky, nice pants that aren't sweatpants. And for me, that would be the sign that like, hey, you're awake and you're not just trading in your sweatpants. And I cannot tell you, in 2021, there was multiple days where I had like big winning days and I would be doing that. And my one losing day of a week would come from the one day that I didn't take the time to put those pants on. Like it made that big of a difference in me following my rules, right? From there, I always like to do a little bit of a morning walk, just 5 minutes around the house or around the block, just again, wake my brain up, make my bed before market open. And then at 6:20 a.m., I always watch the Best Day Ever music video by Mac Miller. And for me, this puts me in the right mental headspace in order to trade each day, right? So the process and the thought process behind having a morning routine for your psychology is a hack on the way the human brain works. If you have a routine that you follow on a daily basis, right, then you are more likely to follow your trading rules, right? I imagine most of you out there, the biggest struggle that you have is following your trading rules, right? Some of you, it might have been seeing the charts. Your biggest problem after this mastermind is not going to be seeing the charts. Yeah, you might have to, master your craft a little bit over the course of the next few months, but seeing the charts, you're going to do that well. The vast majority of the time, people's struggles come with a rule break, right? And the easiest solution to preventing that rule break is to have a solid morning routine, because if you do that morning routine every day, then when the market opens, you are more likely to follow your routine of following your trading rules, right? So it really is that important and that crucial for you to have a morning routine from a psychological perspective that you do every single day, right? In addition to that, of course, we also have our technical routine, right? So in addition to the psychological routine of getting ready mentally to trade, you also have to find the right chart setups, right? So for me, what I'm going to do is pause here, right? I'm going to copy and paste this. And then we are going to dive into Thinkorswim a little bit, right? So let me go ahead and stop share. As well as I'm going to take you to the text lessons of the Discord. So bear with me for 1 second, my friends. Let me get this all loaded up. All right. So first thing I would like everybody to do is just head over to the text lessons channel of the Discord and throw a check mark on there for me, just so I know that we're all following along on the same things. Perfect, perfect, perfect. All right, I need to get my, where's my bottom window? Where's Thinkorswim? All right, there we go. So now let's go down to the window. Okay, right? And now what you all are going to see on the screen here at the moment. Now, this is off my laptop, so it's a little bit more compressed in terms of how many charts you can fit on the screen than what I would actually have doing my pre-market routine each morning. But this is one of the layouts that I gave you in lesson 1, right? In the very first lesson that we had as a group, this was one of the layouts. So again, when I say that every single lesson matters, right? It's because each part of this, there's been several questions that have been popped up that lesson 1 answered in a way that you just might not have expected it, right? So step 1 that you all can see there on the pre-market routine. Step 1 is to check the indexes and perform multi-time frame analysis. So the very first thing that I do on any individual given trading day, right? And let's clear out. We'll just clear these levels out for now, right? The very first thing I do is I come into the day and I conduct my multi-time frame analysis, right? So the first thing I do is I looked at the ES, and today we can say that, okay, big gap up on GDP data, right? We had a big gap up in the ES, right? We then go to mark out our levels. I just erased mine, so I don't have ones from way far back. But from my knowledge, there actually was not a level in the immediate area for us. The ES's closest level that I was really paying a lot of attention to, there was a couple of end of day levels, right? But was right there, 45, like 83s, right? Where we kind of paused the day before. So I go through and I say, okay, that's the level that seems to be most in reference, right? Again, it's a little bit of a small screen right now. We do this, it's small because I want to do this on my laptop. On my big computer, the screen gets way too wide. It's hard to see, right? But the first thing I do is I mark out my levels, right? So then I would go through and I would mark out on the NQ. I'd say, okay, NQ is getting a little bit of a different gap. It still has a variety of levels, right? There's this one here, and we have another one right there, 15,558, it looks like. So I say, okay, I have my levels marked out on the ES. I have my levels marked out on the NQ. All right. NQ was getting today the same similar gap up that the overall SPY was getting. You can see that in the 5-minute corner. So what I'm doing in this first thought process, the charts that I have aligned here, right, and the charts that I have broken out here, right, is that on the top left, I'm looking at a 5-minute chart. This all comes directly from lesson 1. I'm looking at a 5-minute chart here, pre-market, right? Doing my analysis, gauging what's going on in the pre-market session with extended hours on. Then this chart here is flipping between, for me, a weekly and a daily chart. I start on the weekly, then I'll maybe flip to the daily, see how that looks, right? But it's the weekly and the daily chart. In the bottom left, I'll have a 15-minute chart pulled up. That way I can gauge how we kind of look in the pre-market on a 15-minute chart. Here in the center, we'll have the hourly levels where I'll be marking those out, right? And this bottom, for me, will kind of act as like a floater. It will flip between various things, but for now, we can say it's staying on the daily chart, right? So the first step of our morning routine is to go through the indexes, much like we just did for the day, right? And for the day, NQ, this isn't a formal level because it's red right there to red right there, but this open I would still consider an important open. We sold off pretty hard from there. So having that open marked was really the only thing that I had for the day, as well as these lower levels in the NQ at 558s and 487s, right? So that's step 1, right? Step 2 is going to be back in the text lessons channel there, right? That's where we're going to start checking our main watch list. Go ahead and give me a check mark on that in the text lessons channel. This is when we are going to be starting to identify our main watch list and looking for opportunities throughout there, right? So what I will do is you can go ahead and drag out this little side part on Thinkorswim. You can make sure it's linked to the same link as the rest of your charts, all stuff we talked about in lesson 1. And from there, I will start to do the same thought process that I just did on the indexes, marking out the levels and doing multi-time frame analysis on individual names that I was trading, right? So today, for example, I looked at PANW and I said, okay, I don't mind this PANW weekly chart. And the key level for the day is this 247.18. A gap above that does technically have room. But what I noticed on PANW was that we had another level right here at 249.19, then another level at 250.31. So when I was looking for a potential trade setup on PANW, the thought process in my head was, okay, we have a level at 247.18. If we gap above that, in theory, we can rally to the next level at 249.19, but that's not a whole lot of room. $2 on PANW doesn't really excite me that much, especially knowing that with the buy setup that we find as an entry, we're going to need to likely have a decently wide stop. Pawn spreads are kind of wide. It doesn't really intrigue me all that much. So for me personally, I also, when looking at PAN, went through the thought process, and I was like, well, this daily chart is nice. It's strong. It's holding well. But I don't really think it stands out to me so much that I need to be trading it today. So for me, PANW didn't make the list, right? Then you go through some of the other names that we had on here. You look at a name like Lulu. We go through the same process, right? Okay, what are the levels in play? All right, we have a level here. Lulu looks like it's gapping over that level, but we have another level right above. Right there, another one right there. So again, Lulu was getting a gap above a level, but it had several levels along the way of resistance that made it unattractive to me, right? Because there wasn't a whole lot of room up into the next target. Let me show you that on a bigger chart here. Let me kind of make that a little bit bigger. If you look at Lulu zoomed in over here on the right, right? Coming into the day, you can see we had a level right there at 381.13. And you all might be thinking, Jake, you said you like gaps over levels. Lulu is technically gapping over a level. Don't you like it? Right? And it's not that I don't like it. It's that I can see Lulu has several levels above and several pieces of resistance above. So there isn't a whole lot of room for me to capture a level-to-level move. Lulu would have been better if it was gapping over here or gapping over here, where there's a larger space in between levels for me to capitalize on. So ultimately, I decided that, okay, Lulu is also not going to be on the list, right? So you go through, and that's the second part of our thought process, is then checking off individual names, right? Now, for example, let's just say that you go through the individual name list and you can't find anything. You've gone through all of the names on your list and none of the stuff looks that appealing to you. That was not the case today. There was plenty of names that had potential today, which we'll cover in just a second, especially the ones that I had on my watch list, right? But let's say, because there's going to be plenty of days where you go through and you scan your list of names, which mine sometimes gets bigger than this, but for now, these are the ones I've been paying attention to, right? And for me, right, sometimes you won't be able to find them. So there's a next step process that you have to go through. The next process of elimination there would be to go through the earnings calendar, right? You can find that usually always in our pro chat. If you just scroll up a little bit, the earnings calendar will be there. So today, there was two names that looked like to me that they were interesting from an earnings perspective. We had Meta, and we had Meta, which was strong in a potential upside trade. And then we had CMG, Chipotle, which was weak and a potential downside trade, right? So if you couldn't have found anything on your main two lists, right? Or the main list, your main first list, excuse me, that you go through. The next step would be to go through the earnings list and look for potential setups in those names, right? So the next steps, if you go through the earnings list and there's no good earnings name, you still can't find anything to trade. Spoiler alert. That probably means that you shouldn't trade that day. That probably means that there's not all that much that's really actionable for you to be trading, right? Right? But that leads us to step 4 on our list, right? Which is for us, we're going to check a default watch list in Thinkorswim. So on Thinkorswim here, if you go over to the watch list tab over here on the left, right? It's right here, right? If you go over to the watch list tab and you select an options, you go to public, F through N, there's going to be one called Market Maker Move Stocks. And this basically what it is it's a Thinkorswim auto-generated list of stocks that are active in moving that day, and they all have options that are tradable on them. Not tradable, but they all are optionable, I should say. Right? So if you're still looking for a name, you can go ahead and just use the arrow key and click down and scroll through and see if there are any names that are attractive to you on that list, right? Usually there's not much on there, but sometimes there will be a diamond in the rough on a day, and you can find very high quality trade opportunities on there sometimes, but you always want to make sure that the options are active enough, look from a liquidity perspective, right? So from there, those are the first 4 steps that we have in order to find what we're trading that day, right? So the next step and the next thought process there, right, is to then go through and build out your focus list for the day, right? So of all the names that I was paying attention to, the one that stood out to me the most was 1, Snow. Snow was getting what we call a gap over red, and we're going to talk about that in just a second, right? Or just a few minutes, right? Snow's getting a gap over, but really what it was getting is we have a level created here, right? At the previous day's open. Right? We have a green bar that gaps down into a red bar, right? So there's a level there at 174.2. And up here, we have a pivot at 178.9. There's also a larger pivot that I've been targeting on Snow at 184.71. So the interest for me on this name in Snow was, okay, a gap above 174.2, and that will have room up into 178.9 and potentially all the way up into 184.72s. That is one of the reasons Snow was a focus name for me today, was it was 1, gapping over a level, and 2, it had room up into this next level, right? The other thing that I liked was that on the daily chart, with this gap up, Snow was looking like it could have set a potential higher low at the bottom end of this range, right? So Snow looked good. Snow actually looked good. It had a setup in there, and we'll talk a little bit about why I did not personally take that setup, right? Now, in addition to Snow, one of the other names that stood out to me was TTD, which is not usually a name that I trade, but I really liked this daily chart pullback, and I really liked the weekly chart for a potential failure to go lower to kind of push up into the upper end of this range. So TTD coming into the day, I went and I marked out my levels, and I found that we had a level at 87.36. So my thought process was a gap above 87.36 would have at least room for a $2 move, which on a stock under $100 like TTD is appealing, right? And then if it gets continuation, it could potentially rally even higher, right? Up into this previous high at 91s. The options could make a very explosive move if that happens, right? So the game plan on TTD was look for a gap above 87.36 that holds on pullbacks, then look to get long, right? So again, we'll talk about why I didn't take this trade in a second, but we'll also talk about it right now. It opened up a little bit too far above the level for me, and it just sprinted straight up into the next one. So there was no potential entries. Even down here, you could have entered and tried to stab there, but that never even tested the level, right? So we never got that level test, which for me meant in this situation, given what the overall market was doing, it meant no trade as a whole. Right? So these were the two focus names for me on the day, right? So the next thought process that we have is to build out that individual stock list, which for me on this day was Snow and TTD, right? Now, the next step in our process, and I want everybody to check this one. Everyone who's watching this, please go to Text Lessons and check this one, because this is the reason why I caught the short today. Everybody, go check it. I want more on this checked on this one than checked on the first one. Step 6, please check it. I'm going to be that guy and make us do it. Right? Just step 6. You don't have to do all the other ones, but just step 6. All right? Because this is what matters. You have to create scenarios for individual stocks that you are watching, as well as the market as a whole. Right? So the first scenario that I created today was on TTD, and I said a gap above 87.36 has potential to rally up into this 89.32s and then up into 91.6s from there, right? That was the game plan on TTD, right? Snow, the game plan was a gap above 174.20, has room up into 178.9 and 184.71. That was the levels and the potential plans in the scenarios in which I had created for individual names on my watch list. But the other portion of this step is creating a scenario for the market as a whole. So for me personally, I came into the day not having swung long, right? So the first thought process in my head was, damn, I got some FOMO because I wish I was long. And the market's gapping up. It kind of looks like it might want to keep going higher, right? However, it was a large gap up. We had gapped up 33 points, almost just under 1%, which on an overall index is a very large gap, right? And on any individual gap that we have, especially one that is large like this, we know that one of two things is going to happen. That gap is either going to hold or it's going to fail, right? So in order for me to have been long on some of the names that I wanted, AKA TTD and Snow, I needed the market to be holding the gap, AKA I wanted it above the opening print, right? So if we look at TTD, for example, never triggered. This never triggered. So is it clear to everyone? Just give me a bunch of yeses in the chat. Is it clear to everyone why I skipped TTD as a trade? Right? Clear to everybody, right? I was looking for a buy setup or a pullback to the level. We never got the level, right? Now, the one that most people I imagine are curious about is Jake. Snow opened above the level. It got a harsh pullback, but then we got a 2-minute buy setup right there, breaking above the level. Why did you not take Snow, Jake? Why did you love Snow? Why did you skip Snow? Based on the morning plan, right? Snow triggered and it was valid. If anybody took Snow today, that shit's valid as fuck, right? Very valid. However, part of my step 6 was creating scenarios for the overall market as a whole. So one of the things I was afraid of was the market failing this gap, right? And while the market was technically holding the opening print while Snow was getting that move back up, right? The market was not showing me signs that it was actually going to be giving this strength and progression, right? It was not getting a continuation of the trend. It was just stalling. It was just going sideways, right? So for me, I didn't feel super comfortable chasing into one of those other two names, right, early until the market showed me that strength. The only one that I was open-minded to was on Tesla. right? And I actually shouldn't even say this. I honestly don't think if I took snow, if I was not watching Tesla, I probably would have taken snow as well, because, or instead, I so to speak, because the market did have some signs of holding the opening print and making a move higher. So I take that back. It did have some signs of that. And that's why I tried Tesla. Because if the market was willing to make that move, I wanted to have some upside exposure for it, right? However, if the market was not going to make that move and hold, I wanted to get out of the way quickly. And that's exactly what I did on my Tesla position. I entered at 105. I exited pretty much at 105, right? Like it was like 110 or something like that, right? So for me, I ended up getting out of the way very quickly, right? Because all of a sudden we started getting these signs that the market was not going to hold the opening print. Right? So on a gap up like this, if it doesn't hold the opening print, in theory, we can extrapolate and come to that next conclusion that we are going to see a pullback, right? We're going to see a pullback or a continuation down because we could not hold the opening print, right? If this market was going to hold this move, this gap up, it was going to hold above the open. And we weren't able to get that, right? So when we failed to hold above the opening print, which I'm now going to turn into green. Sorry, I'm getting blown up. Right? When the market failed to hold the opening print, right? We see a then clear start of break and a failure of this gap. So I'm excited for the fact that this lesson 8, came on a day where setups looked really good. What I'm going to do as soon as this lesson is done, I'm going to give access to Mastermind 9.0 lesson 10 to you and all the other classes, because that Mastermind 9.0 had a bunch of chart examples of a morning plan that worked, right? That worked. Like I think the example from the last class was CRM, but it was similar where snow, where we had a morning plan, it triggered and tried to work, but failed in our example. In that example, it worked, which should serve as a reminder to everybody that no matter how good a setup looks, right, they can always fail, right? And one of the things that I've taught you is that failure moves often provide a strong, powerful move in the other direction. So today, when I noticed that the ES had started to fail this gap up, all of a sudden, right, the ES starts to fail this gap up, right? I'm starting to sense that this can provide a strong move in the other direction, right? So I ended up getting short. I used a 2-minute sell beneath the opening print in here, and it wasn't the cleanest of sells because I was signaling in. I was trying to make sure everyone got a good fill, right? But we get a pretty straightforward move down, right? Now, because I was trading XPX, and because I was signaling it, I took some profits a little bit earlier than I normally would have in the process of holding this. But we were able to hold this trade, even the first one, right? From like 180 to like 6 or 7. I think it might have hit 8 or something like that. I don't remember what exactly it hit, but we were able to hold it for a good move, right? I actually do. I'm curious. I want to go back. I want to see when exactly I signaled a close on the very first short of the day. Sorry for the delay. I just really want to make this. It was most at 8:21. So I ended up taking most of mine off right here, right? Mainly because I was worried that the market itself was going to bottom and low, right? But a big question that I get asked is, Jake, how do you ultimately end up managing these positions, right? How do you ultimately end up managing them? And I'm going to say, pardon my burp there, I'm going to say that it's never a perfect science. We're going to dive into a slide of this in just a second, but I want to cover it really quickly while we're on the charts. It's never a perfect science. There is no perfect specific answer, right? You are all going to have to learn and experience. There is no perfect way to hold for level to level every time, because it doesn't always, there's no perfect scientific answer. In terms of trimming a position, in terms of how do you manage it, when do you trail out of it, there is no perfect answer. It is a combination of art and science, right? So for me personally, what I was watching on this position, the first one early on in the day, right, was we had caught in this short down here, right? We had then started to move down, right? And from here, you can see we actually tried to go higher and failed. So what I did during that point in time was I raised my mental stop loss to right there. Why? Because if we broke back over that high, in theory, we would have been flipping back into an uptrend, and I would have wanted to try and get out of the way, right? At least on a 5-minute basis, right? From there, we ended up getting another little leg down, a little bit of a rally up, and here we trigger another 5-minute sell setup. So now all of a sudden, my stop loss is going to be raised to the next pivot point. I like to trail my stop losses based on the sell setups, right? So if that sell setups failed, I would have gotten out of the way. Next, we see the market continue to move down, We see a spike lower, it moves lower, but then it stops and pivots back right here. At this point in time is when I sent the signal to the group, I don't care if it goes further without me, I'm most out. And what I was mostly concerned about was I didn't want to give back SPX gains on a contract 0 to ATE that ran to 0. But also, to be quite frank with you all, I'm just not great at holding shorts, right? In theory, I probably should have held my short through that little bit of a low, right? Or excuse me, through this down to this new low, up to a new sell setup, and then raised my stop loss to here, right? So from there, right, I managed my position. I was out of it right here, and I was starting to look for a new entry, right? And where I found my next new entry on this was in the NQ, right? And I shorted right here, which I know might not seem like traditional because it's kind of a weird, it's not really a defined trend, but I saw the NQ have a failure to get over the opening print. Didn't necessarily trigger a formal sell setup, but it did trigger a failure to go higher where I could put my stop back above the opening print. From here, this trade moved down. As we moved down, I took profits along the way, right? I did make sure to try and hold some, knowing that my larger target was down at 1558, right? But I ended up exiting this position fully right here. When we broke back over a previous candle's high, all of a sudden I'm looking at this and I'm saying, hey, I have no trail spot to raise my stop loss to. I have to keep my stop loss up here if I want to remain in this trade. So all of a sudden now, do I really want to hold this one to go red when I'm up 80%? Probably not. So as we break above a previous bar's high, signaling to us that even within the downtrend, there's going to be a pullback and a rally within that downtrend, I got out of the way and I closed that position, right? From there, we had an ES, the last ES short of the day, right? So I've talked about this in a YouTube video that I imagine you all haven't watched yet because I just posted it before our class started, right? But I took a short entry right here, right? And what I was looking at that point in time, it might kind of be like, Jake, you know, what the heck? We just flipped back into an uptrend, didn't we? Why are you shorting once we flip back into an uptrend? Right? For me, the 5-minute chart had gotten back into a little bit of an uptrend here. But the 15-minute chart was not necessarily painting that same story. It had set a low in the morning, then sold off aggressively, kind of filled this gap, tried to bounce, and then all of a sudden it had failed to go higher, right? So looking at the variety of timeframes here, including the hourly chart, which had just 2 inside bars, it's definitely not conventional, but it has 1, 2, 3 like traits, right? All of a sudden I'm thinking, okay, we could maybe fail this little failure to go higher here and start to trend back down to the downside again, right? So from there, I entered short there. right? And now the question starts to become, Jake, how did you manage this position? And here's the reason why. Number one, I sold early. And number two, I don't really care that I sold early, right? It doesn't really bother me, right? Let's take a look at it from this perspective, right? What I just talked to you all and mentioned is that I like to trail over or under previous highs or previous swing lows, basically under sell setups or buy setup, right? So if we're looking at this structure perspective and we entered short right here, or even if you took the short right there a couple minutes later, right? The next leg down, we get an erratic move down, and then we get a push back up here. And here, while it's definitely not conventional, we do trigger a sell setup / a 1, 2, 3 type pattern, right? Definitely not conventional or pretty, but just stick with me mentally. So if I wanted to trail my position, once we got down here, if I wanted to trail my position, AKA hold it, right? And where I would stop out if we got back over, right? My original stop loss was up here, right? That's where I took the failure to go higher short. My original stop loss was up there. Now we've offered a point and pivot area for me to trail my position based off of, right? If I trail based off of here, that's 16 points on the ES. That's $1.60 on the SPY. That means I would have had to have held for a $1.60 rally up on the SPY, right? My contracts would have eaten shit. They would have taken a massive hit, right? So for me, right, even though the risk reward was still there, and this is why I'm kicking myself, is because, like I mentioned, right, holding positions are a combination of trailing spot, right, which is lower highs or higher lows, right? It's a combination of where is the lower, higher low that you are trailing over, right? And where is your R multiple still planned to be? So all of a sudden here, my R multiple, this is about 16 points away from this level and about 16 points away from my stop, right? So knowing that I have 0 day to expiration contracts and that they could potentially lose all of their value, when my dynamic R shifted to 1-to-1, that's when I started to be a little bit more hesitant, and that's why I exited my full position there. Now, in hindsight, I regret that because the NQ, which is the one that I really thought was going to make the down move, I knew had room all the way down here. So risk reward had not shifted in there. But I was trading XPX, I was trading ES, right? So because I took a with trend short, and then we had the next lower high for me to trail over, because that was 17 points away, and my target was 17 points away, all of a sudden my dynamic R has shifted. And because of that, I was a little quick on the trigger to exit my position. In reality, what I really should have done is at least just waited for a break above a previous candle's high. Then that would have given me at least a clue that we were getting a rally within that downtrend. But alas, it's one of the things that I'm actively trying to work on and get better at, right? Is being able to hold for these type of down moves and dramatic moves that can come in the market. I'm still not great at it, but I'm working on it. And today, hey, 800%, that seems like pretty good progress to me, right? But with that, my friends, let me flip back to the Discord. We're not fully done yet. Don't worry. Right? With that, that leads us to our step 7. In the final step and final thought process, I kind of skipped ahead a little bit, right? But each morning, I will build my watch list, right? So this morning, it was snow, it was TTD. So the final step takes you all the way back to lesson 1, right? Lesson 1, we talked about how at the last part of lesson 1, right? We talked about how I would take the contracts and drag them into my watch list and get them ready for the day, right? So that's what I did. Then we moved to lesson 2. Lesson 2, I taught you about how I manage my risk. And I said the most important part of that lesson would be the dynamic R multiple, right? Here, we talked about how lesson 2 plays a role in how I manage this trade today. Not only does it play a role in how I size this trade overall, but it plays a role in how I manage this position once it was working for me, right? Then if you carry over into lesson 3, what we covered in lesson 3, right, was finding a buy or sell setup plus trend analysis, right? I used not necessarily a sell setup. This one was a failure to go higher, but I used this candle analysis from lesson 3 in order to find my entry on this trade, right? Now, lesson 4, we talked about levels. And for us on this trade, the levels that we used on the first trade was the opening print, which is always a level for us. And the second one we had as 45.83, which was our target on the trade, which ended up getting smacked and then ran through to the downside, right? Then in lesson 5, we talked about how above all else, we want multi-time frame analysis to be painting a clear picture for us, right? And while it may not seem super clear on this example, because the 5-minute chart had kind of flipped into an uptrend, at this point in time, when I entered this trade and when I entered this trade, we were below the open, which meant that the daily chart was failing that gap up potentially. AKA, it was signaling a pullback. Even though it's in an uptrend, it was signaling a pullback, right? I feel like, yeah. So by taking our things we've learned in lesson 5, we can then start to apply that to this trade. Right? Now, lesson 6 will have chosen us and helped us choose what's the strike price that we select when we are entering that trade and how are our options going to move. Well, the strike price selection for SPX is a little bit different. However, it does follow the same thought process, right? SPX, the number on the levels was a little different. I think it was like 45.70s, right? But my strike price of 45.85, right, was following the golden rule of lesson 6, was that to make sure, right, that all of our trades can end up in the money so we know exactly how much they were worth. The plan my entire time was to see if I could get my contracts to be worth at least 10.0 if they can go and tag the level, right? So that's how we've translated lesson 6 into this trade. Lesson 7 could have been translated into this trade if you traded futures, with which a lot of my students who caught this short today traded futures. I don't know if anybody used like a call credit spread or the more advanced strategies here on this one, but you take lesson 7 and put that into it, right? And then you take our lesson 8 and I break down exactly how I found these trade setups on the day, right? Now, again, this lesson 8 is a little bit unique in the sense that the trade setups we found today were high quality and failed. So we had to resort to a different trade setup that presented itself. But everything from this trade setup that we've talked about is brought through in lessons 1 through 7, right? My chart layout and me putting those contracts in my watch list pre-market, lesson 1. How I determined my risk and how I managed the position, dynamic R multiple, lesson 2. How I found my entry, lesson 3. How I found my target, lesson 4. How I painted the overall picture for what was going to happen on that chart, lesson 5. How I picked the strike for my option contract, lesson 6. If I traded futures that day or used a more advanced strategy, lesson 7. How did I tie this all together? Lesson 8. So when I tell you all in the beginning of this program, my friends, that I do these 8 lessons in a very specific order, in a very specific way, so that at the very end, I can tie it together in a way that's like, holy shit, this is why. This is why. This is all what you have just seen, right? And let's take a look at snow, right? Let's say that you followed the morning plan, right, on snow, and you took the trade that did set up and trigger in there, right? Let me pull over some snow contracts, and let's look at the 175 calls and what they did during that time, right? Using all of the things that I have taught you in the previous lessons, right? If you took the snow call, aka right here on the buy setup, getting back above the level with your stop beneath that wick, right? Your entry would have been 2.0 and your stop loss would have been 1.7. Meaning that if you took this snow trade, which failed today, roughly a 20% loser. So if you followed the system to a T and you followed it and you took a trade on snow that followed everything that the system said, you would have lost roughly 20%. Then if you followed everything that the system said, which didn't necessarily for, the ES, this one time I will say it wasn't, again, I didn't make, this was a 800% plus trade for me and it was not my biggest day ever. So clearly I didn't use my biggest position size. It was not necessarily A plus, but on a winning trade that we had, it went multiple thousands of percents. And that, my friends, is exactly how you can have all of the keys to becoming a consistently profitable day trader. Now, the one last note that I like to have here, we're going to pause and take back the share to my Google Chrome. Where did that go? I hate this Windows thing. All right. We're going to pause and take back the share to my Google Chrome. All right. There's these few different specific types of gaps that I like to pay attention to. I like to pay attention to what is known as a gap over red and a gap under green. For me, these gaps often provide more powerful moves, right? People sometimes get confused on them or harped up on them. They are exactly what they sound like. It's the definition is on the daily chart, bar 1 closes a red candle. Bar 2 opens above bar 1. It gaps above the red, right? A gap under green would be the exact same thing. On the daily chart, right? On bar 1, it closes green. Bar 2 would open beneath bar 1, right? So what you will see is that there are plenty of examples of this throughout the markets. All right, so let's take a look at the chart of the SPY, and let me just go right here. Actually, let me just get one full screen. Right here, you can already start to see right here is an example of a gap over red. On the daily chart, we have a red candle. That's bar 1. This is bar 2. How do we trade gaps over red? The exact same way, that the same system. We use the system. It's the system. There is no playbook. It's the system. We use the system. It's the same exact thing. It's just a daily chart setup that we've found to get consistent follow through, right? So here you can see another example of one, right? Where the chart gaps over the previous day's red candle, thus getting a continuation move up, right? What would our sign be, everybody? Think about the stuff that I've talked about in tonight's lesson in reference to the SPY. I want 10 plus answers here at least. What would the sign be of a gap over red failing? Let's say right here, this gap over red that we're looking at. What would be the sign on any time frame, but particularly maybe a smaller time frame, that the gap over red right here, right there, we can see red bar and bar 2 gaps over red. What's the sign to us that that gap over red may be failing? More answers. I've only seen 5 or 6 pop up. Fail beneath the OP. Exactly. Failure of, okay, whoever said failure to go higher, you're not wrong. Because like failing pre-market highs is often part of that equation. But at the end of the day, the line in the sand is the opening print. If we get a gap over red, we should be holding over the opening print. If we get a gap under green, AKA right here, where we have a green candle, and the next day we gap under it, right? If we hold beneath the opening print, right? That signals to us that trade is going to get continuation down in that direction, right? So it's called a gap under green because it's a green candle and the next one gaps under it, right? Gap over green, red, gap under green, line in the sand, opening print. So on either a gap over red or a gap under green, again, not introducing something brand new to you here. This isn't like being like, oh, last minute, here's a secret sauce. No, this is just a specific nuance of a daily chart in which we would use the exact same strategy that I've taught you all over the course of the last few lessons, right? It just means that we have a daily chart edge to it, right? So a gap over red would be right here. A gap under green would be right here, right? And on these days, the line in the sand for us is the opening print. Right? It is the opening print. That is our line in the sand on gap days. Right? So again, going through these, if you were to go through a gap process, right? And you were to look, like, let's go through, right? And one thing that I will say, right, is let's do a little pre-market prep for tomorrow. Roku reported earnings after hours, right? Roku reported earnings after hours, right? Let me get them over here on the flex grid. And you can see they've gotten a strong reaction to that earnings, right? On the daily chart, Roku just put in a big red ugly bar with 73.50. Opening at 74 means that Roku is slated to open as a gap over red, right? So this is that previous day's open. Then we go down into the hourly chart and we can see that Roku has a level at 74.43. Has another one right there above, right? Little zone right there. So all of the sudden now, if you're looking at a potential trade in Roku, right? If we get tomorrow a gap over red, meaning we open above this, as well as preferably above these two levels right here, Roku has room up into the next level, up at 77.85. Looks like there's also a sneaky mud trucker right there. Yeah, 75.31. So preferably it would even be over the 75.31, but this would be a gap over red on the daily chart. And then we would go through our exact same thought process, right? Lesson 2, we'd be looking for our risk management and how we would define that on an individual given trade. Lesson 3, we'd be looking for a buy and sell setup. Lesson 4, we'd be marking out the levels. Lesson 5, we'd be doing our multi-time frame analysis. Lesson 6, we'd be selecting a strike or using an advanced strategy. Lesson 8, we'd be tying it all together. It literally is that, my friends. This is the program as a whole. In the course of the last 8 lessons, I have taught you literally everything I know. There is nothing I am holding back. Yes, there might be things that like I see or I have like drilled into my brain as screen time that like are instinctual at this point that I don't know, like that. Of course, like, you know, there's stuff steered in my brain that I can't necessarily share. Literally everything that I know has been put into this program. Literally everything. And so at the end of this particular lesson, my friends, you officially have it all. So everybody, do me a favor. You don't have to, but if you don't mind, if you're free, I always like to do this. If you are at your computer, do me a